What's up YouTube? Welcome back to the channel, and in today's video we're going over Bird Construction's Q1 2026 earnings call presentation. They did have a pretty decent quarter in my opinion, but we're going to go into the details here. Start off with the financial highlights. They highlight strong organic revenue growth in the buildings business, partially offset by lower year-over-year industrial revenue. Infrastructure grew organically and benefited from contributions from FRPD. Adjusted EBITDA percentage aligned with revenue mix, and year-over-year growth in net income and adjusted earnings reflects higher volumes supported by stable margins and disciplined execution. So they did see a 9.2% year-over-year revenue growth, and net income and earnings per share grew 21.5% year-over-year. So really good start to the year on that end. Their margins did slightly decrease year-over-year, but that's not really something to super worry about right now. For the next slide, $11 billion in combined backlog with securements across business units with growth in line or above market growth. And over this past quarter, they did secure another $1.1 billion in contracts. Then for sustained adjusted EBITDA progression, margin performance reflective of revenue mix, 2026 margin expectations driven by structurally higher margins on newer work, underpinned by disciplined project selection, strong cost control, and increasing self-perform execution. And then continue to expect revenue growth and margin accretion to accelerate during the second quarter and throughout the second half of the year. So they did touch on that in the year-end presentation. And in my last video, I went in deeper into that, but they're still projecting a lot of the revenue growth and margin expansion in the second half of the year. Mostly in the second half of the year, but also starting in the second quarter. And then over this last quarter, they did announce two big strategic partnerships, one being the Ring of Fire. So it's a strategic majority Indigenous owned partnership with delivery of infrastructure opportunities that support both near-term community needs and long-term infrastructure growth. And then the next one is Bell, the strategic long-term partnership with Bell AI Fabric, which will be building out a 300 megawatt Sherwood data center, leveraging large-scale infrastructure execution capabilities and reinforcing its role as a leading specialty contractor. So for the Ring of Fire opportunity, it says governments advancing road transmission and enabling infrastructure programs, and it's one of Canada's largest critical mineral regions with significant long-term development potential. So that's a big partnership for them, long-term and in the short term as well. But the one that really sent the stock flying after earnings was their Bell partnership. So it says preferred construction partner to Bell AI Fabric for large-scale AI data center development in Canada, leveraging Bird's integrated self-perform capabilities as leading specialty contractor. This will be a long-term partnership that supports disciplined planning and investment in people, supply chain, and capacity for a multi-year build-out. And then something kind of important with this partnership is that Bird will be issuing Bell warrants to acquire up to 2.6 million common shares subject to TSX approval. So lower down in the presentation, it says warrants align long-term incentives to deliver capacity. So it'll be a total warrant shares of 2.6 million Bird common shares, with 750,000 warrants vesting on the delivery of the Sherwood facility, and then remaining warrants vest in connection with delivery of potential future AI projects, as and when delivered by Bird pursuant to the strategic partnership over a period of 5 years. So the exercise price of $52 in the 5-day volume weighted average trading price immediately preceding the announcement dates, and they have an exercise period of 7 years from the announcement date. So with this partnership, they will be having a little bit of dilution with common shares, but for the size of this contract, it'll build out their portfolio of big infrastructure projects, and they'll be able to have more on their resume for bidding on new AI data centers. So this dilution does hurt a little bit, but overall, this is really good news, a really good partnership for Bird. For their financial highlights, like I said, 9.2% year-over-year revenue growth. Gross profit rose 7.1%. Adjusted EBITDA 8.9%. Net income 21.5%. And cash flow from operating activities up $55 million year over year. Revenue growth driven by organic growth in buildings and infrastructure with incremental contributions from FRPDs. So they are starting to see some revenue contributions from that acquisition. Margin performance reflects revenue mix with disciplined execution, consistent with expectations for 2026, and earnings in line with revenue growth and stable margins. So this quarter was pretty much in line with where they wanted to be to start the year. And getting into the later half of the year, they do expect to expand on that. So for free cash flow generation, they have 259% trailing 12 months free cash flow conversion percentage of net income and a trailing 12 months free cash flow per share of $2.31 with a total trailing 12 months return on equity of 25%. For their full year 2026 outlook, they do still have combined backlog of $11 billion. So that gives a lot of visibility for what the rest of the year will look like, with revenue growth and margin accretion expected to accelerate in Q2 and the second half of 2026. And all businesses contribute to a full year double-digit revenue growth. So good outlook for that rest of the year. Their transformative partnerships will also help them out going into the rest of the year and beyond 2027. They're still seeing a robust bidding environment across defense, healthcare, data centers, nuclear, LNG, critical minerals, and renewables. And healthy balance sheet and liquidity, supported by strong operating cash flow generation, provides flexibility to pursue organic growth targets as well as selective pursuit of strategic tuck-in acquisitions that broaden their abilities and reach. So now I want to hop over to the earnings call transcript, and there were some things I did want to kind of go over for the outlook for the rest of the year as well as their partnerships with Bell. So the CFO states, we think we're going to gain momentum with the recent announcements here at the Ring of Fire and with Bell AI Fabric. It's going to contribute probably less so to 2026, but certainly going into 2027, we're going to be carrying a healthy book of business. Included in our $11 billion of backlog is actually not very much from these opportunities. These are the kind of second quarter developments. So they'll be carrying over probably less than 100 million in the $11 billion for these. So that's not even reflected in those results. So they're pretty confident going into their 2027 targets. And then for the issuing of the 2.6 million warrants, they say we like this a lot because it really drives alignment through the strategic partnership. In terms of vesting schedule, the first 750,000 warrants will vest as the first project here in Saskatchewan comes online. And then the future tranche of the warrants will vest with the other future projects that come about and are awarded to Bird. And that will occur over a 5-year period, and the warrants have a 7-year total life to be exercised. So this 2.6 million warrants of common stock won't all come at once. They will be kind of staggered, with the first one only being 750,000. So right now their Bell partnership isn't even reflected in their $11 billion combined backlog. They expect in Q2 it'll certainly have it reflected in their combined backlog, and EA says they expect that it would go into booked backlog in full. So there may be components that flow through pending first, but in total it will be reflected there. So I expect next quarter that $11 billion backlog number will have a bit of an increase considering this whole Bell partnership isn't even on the books yet. And then lastly, he says the warrants aren't tied to one project. 750,000 of the warrants are tied to the one new data center, but the rest of the warrants are tied to future data centers that would be awarded and completed by Bird over the next 5 years. And that would be a pretty significant pipeline of opportunities for our business, but obviously gives us great visibility to our work program and to work for a tier one client. So they obviously aren't worried about this slight dilution in stock. They are more than happy to take that on with the fact that they're being awarded these huge new contracts. So overall, this Bell partnership is very bullish for Bird as a whole, and I am excited that they have this new massive contract. So overall, really good quarter from Bird. I don't believe they're currently, I think they're close to fair value right now. Maybe probably a bit overvalued at the moment, considering their stock price has surged significantly over the past month, and year to date, they're up almost 100%. So they're very much in the overvalued territory. And with them making up around 9% of my total main investment portfolio, I will be looking for more of a pullback in the low 40s before I pick up more shares. But overall, really good start to the year with a double beat in earnings per share and revenue. And I do look forward to what they have for the rest of the year. But that'll be it for today. Thank you everyone so much for watching. If you like this kind of content, please like and subscribe, and I'll see you in the next one.